Canadians will soon be facing tighter rules when it comes to borrowing money to buy a home and borrowing money against their home, too. Ottawa today responded to the many warnings from economists about our growing debt load by cutting the maximum amortization period for mortgages and limiting what you can borrow against the equity you already have in your home. Those changes and others are expected to put home ownership out of reach for thousands of Canadians. Elaine Yong reports.
But I just love the openness, and that's what we're seeing now with these kitchens, the way they're being done.
Right. In just a few days, realtor Nico Lambernudis will be handing over the keys to this Vancouver condo to its new owners, first-time home buyers. And the timing couldn't be better. On July 9th, it's going to be more difficult to qualify for a mortgage. The biggest change announced in Ottawa today, no more 30-year amortizations.
It's going to affect a lot of people in a lot of price ranges, but probably we're going to see it with the first-time home buyers, where they might have been just on the edge of being able to purchase or not. So those buyers will probably have to tighten up and tighten down a little bit to get into a property.
Over the past 4 years, the federal government has slowly tightened up the rules for high-ratio mortgages with less than 20% down, whittling the maximum amortization from its high of 40 years back down to 25 years.
People will just buy a little bit more within their means because they won't qualify.
Mortgage broker Chris Pugh says most of her clients have been taking the 30-year amortization so they can have more flexibility with cash flow. Now that they will have to pay it off faster, it will save a huge amount of interest in the long term, but with short-term pain. On a $695,000 sale price with 5% down, the monthly mortgage payment today at 30 years would be just over $2,900.
If you slide this back to 25 years, monthly payments increase to $3,277. $354 more.
It's not just higher payments. Home buyers will also have to make more to qualify. In our example, that adds up to another $11,000 in salary every year.
Kitchen, yeah, anywhere over there is good.
The other big change that could impact thousands of consumers, the amount you can borrow against the value of your home will go down to 80% from 85%, meaning Canadians will keep more equity.
We probably do need to tighten up a little bit, just obviously with what's happening around the world. We don't want to get to where some of the other countries are.
As long as you've got cash flow, as long as you can afford to make your monthly payments, doesn't really matter what's happening with the value of your house. You can ride out. It's all cyclical. You can ride it out.
So I wanted to show you a loft in the downtown core.
But the old rules are still in effect for the next 2.5 weeks. So home buyers and home owners who have been sitting on the fence will be keeping realtors and mortgage brokers busy as they try to squeak in under the deadline.